Phillip Capital has come out with a very interesting note, and Subodh, who is the author of the report, has come out. Subodh, I must say that parts of your note actually took everybody with surprise. Only when we read the entire note is when we realized that actually you are balancing it out. But the point which you talk about, worst case scenario closer to 16,000 on the Nifty, shook everybody. Tell us, what is the hypothesis? How much probability are you assigning to that kind of a scenario? Because we are in the middle of a kind of a shakeout, or I would say corrective phase. So people are talking about downside first.
So let me start from the very beginning. I mean, in way back in 2020, we had highlighted in our report, Mother of Bull Run, that Nifty from here is expected to head towards 22 to 24,000. And in all our correspondences from there on, we have highlighted that this is the mother of bull run. And this bull run will continue till 22 to 24,000 levels. And Nifty went on to go on to make 22,500 levels. We would like to reiterate that the mother of bull run continues. I mean, if you are looking for a 4 to 5 years perspective, you will be able to see Nifty heading towards 45,000 levels. Right now, on an immediate basis, let me be very clear, on an immediate basis, we see oscillators being highly overbought, and a correction is needed. On an immediate basis, the correction is needed for Nifty to come down to 18,500, 18,750 levels, which is nothing but 23% retracement of the entire rally which we have seen in the market in past 10 years. So that is our base case scenario, 18,500 to 18,700 levels. We see that particular level as an ideal level to buy into the market for the next round of bull run. Now, I would just like to draw an analogy. We have seen the same type of a correction in the market in quarter ending December, March, and June 2021, 2022. But that particular correction was a sideways correction. Here we are expecting some deeper correction where 18,500, 18,700 might play upon in the markets in coming days. So this is what our base case scenario is in the markets. Use 18,500 levels. I'm very clear about it. Use 18,500 levels to buy into the markets for a upside target for next 3 to 4 years of 45,000 Nifty. So this is what my view is on the market on an immediate basis.
Excellent headline you've given us, Subodh, that Nifty could be heading towards 40 to 45,000 in the next 4 years or thereabout. Also, leave us with your thoughts. We really respect your thoughts that in the near term, you have to work purely on levels and resistance, and corrective phases do occur. But here our target audience is also a very investor-centric viewer. This 4-year view which you're talking about, which could be the stocks or sector which could lead or participate nicely in this move of doubling of index possibly in the next 4 or 5 years?
So I'm sorry, I won't be able to speak anything about sectors and stocks, but I would like to say one thing. It is not just one single sector or one single stock that will participate. There will be huge amount of sectoral rotations which will take the market up. I mean, a single stock or a single sector doesn't have that much punch to take the market on top. So, the sectors and the stocks will keep on changing. But overall, the holistic scenario of the market, if you look at the longer time frame of the high overbought nature on the market on technical charts.
All right, Subodh, thank you very much for joining us and explaining your stance, and also giving us a lot of hope to long-term investors. If you have 4-year kind of a horizon, then Nifty could actually head to 40, 45,000. Individual portfolios, carefully crafted ones, can do even better. Thanks very much for your time this afternoon.